Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, as you can see, the Australian dollar is attempting to claw back some of its losses after the bears weighed on the market heavily following a weaker than expected GDP data yesterday. While traders await key US economic releases, mainly the non-farm payrolls on Friday, according to the Australian Bureau of Statistics, the ABS on Wednesday showed the economy in Australia expanded by just 0.3% in the fourth quarter of 2025, missing forecasts of 0.5%, while annual growth slowed by 1.8% from 2.1%. The soft data has reinforced expectations that the Reserve Bank of Australia could adopt a more accommodative stance, meaning that we could eventually see an easing, not a tightening. Meanwhile, Governor Michelle Bullock continues to stress a data-dependent approach. However, another weak reading on growth could strengthen the case for policy easing. Markets now expect the RBA to remain on hold, with a June pause fully priced in and around 50% odds of no move in August. So with the technical still remaining somewhat heavy, all eyes is on 71.20 or lower, down towards the region of 70.70. And reassess them there in case we get a bounce or a correction back to 72 cents. Turning to the euro, the market still remains somewhat heavy, but let's see how it all plays out on Friday with the non-farm payrolls, just in case we do see short recovery. But given the buckled technicals and a weak bias, I'm overall expecting to see a move down to the lows of 115 before the correction. Turning to dollar yen, well, we've got another hanging man here, and it's a little bit on the nervous side, given the fact that we have seen reports from the Bank of Japan they may intervene, and especially close to this top side of 160, where we have seen potential interventions, and that is from the 2 days that we saw here in March, and this heavy down candle, and then followed by another one. So let's see how it plays out. Technicals are buckled, so I am still a bear. Turning to sterling, the market was weaker, but it's now attempting to regain. But overall, I'm still looking down towards this bottom side of 133 for any bounce. Wrapping up with commodities, the market's still a little bit mixed here as the market rebounds slightly into the European session. Given the fact that the markets are still somewhat buckled, let's see how it plays inside these parameters that I've outlined here. And oil, the market now a little bit mixed after its 3-day rally. Nevertheless, still finding a lot of noise and also some mixed bias into the coming session. And therefore, we still could see a range around 89 to around 96. Well, that's about. Thank you for joining me. And as always, look out for the interest rate report. I hope you enjoyed a great start to the day.